Hi there, I'm Mark from Insightful Retirement, here to break down an important financial update that could impact millions of families. If you're a parent, grandparent, or just someone looking to stay on top of tax changes, you'll want to pay attention. The child tax credit has been a critical source of financial relief for families for years, and now new changes could affect how much money ends up in your pocket. What exactly is changing? Will you get a bigger refund this year? And what do these updates mean for your financial future? Let's dive into what's happening and what it means for you. What is the Child Tax Credit? The Child Tax Credit, CTC, is a federal tax benefit designed to reduce the financial burden of raising children. If you have children under 17, this credit helps lower your tax bill and, in some cases, even provides a refund if you owe less in taxes than the credit itself. For 2025, the credit remains at $2,000 per qualifying child, with up to $1,700 refundable through the Additional Child Tax Credit, ACTC. That means even if you don't owe much in taxes, you can still receive a refund of up to $1,700 per child. This credit has helped millions of families afford essentials like food, clothing, and school supplies, and it continues to be a lifeline for parents across the country. New changes to the Child Tax Credit. There's been a lot of buzz about updates to the Child Tax Credit, and while it hasn't expanded as much as some hoped, there are still key changes to know. Starting in 2025, the credit will increase slightly to account for inflation, meaning families could receive an additional $100 per child. While that may not seem like much, every dollar counts when raising a child. For those concerned about income thresholds, the phase-out levels remain the same. If you're a married couple filing jointly, you can earn up to $400,000 before the credit starts decreasing. For single filers and heads of household, the phase-out begins at $200,000. This means that the majority of middle-class families will continue to qualify for the full credit. However, one thing that is not coming back is the temporary expansion from 2021 when the credit was increased to $3,000 per child, or $3,600 for children under 6. That higher amount was part of pandemic relief efforts and has officially expired. Some lawmakers have pushed for its return, but as of now, the child tax credit remains at its pre-pandemic levels. Impact on lower-income families. For lower-income families, the child tax credit has historically been a tricky benefit to claim. In the past, some families with very low incomes, particularly those earning under $2,500 per year, didn't qualify for the credit at all. This left out some of the most financially vulnerable households, reducing the effectiveness of the credit for those who needed it most. Under the new rules, parents may be allowed to use either their current or prior year's income to qualify. This change could provide much-needed flexibility for families who experience income fluctuations due to seasonal jobs, layoffs, or other economic uncertainty. For example, if a parent had a strong income one year but lost their job the next, they could choose the income year that gives them the best possible tax benefit. This adjustment could make a significant difference in how many families qualify for the credit, making it more accessible to those on the financial edge. While it doesn't fully restore the expanded benefits from 2021, it is still a step toward making the credit more inclusive for struggling families. Will there be more changes in the future? While the child tax credit remains at its current level for now, big changes could be coming after 2025. The Tax Cuts and Jobs Act, TCJA, which expanded the credit to its current $2,000 level, is set to expire. If Congress does nothing, the credit will revert to its previous amount of just $1,000 per qualifying child. That's not the only rollback that could happen. The income phase-out threshold would also decrease significantly, dropping to $110,000 for married couples and $75,000 for single filers. This means that many middle-income families who currently qualify for the full credit could see a significant reduction in their tax benefits. Additionally, the refundable portion of the credit could shrink, meaning many low-income families would lose some or all of their tax refunds. There is still time for lawmakers to act, but as of now, no permanent plan has been agreed upon. Some proposals suggest expanding the credit further to help working families, while others push for a return to pre-2017 levels. With an election year ahead, tax policy debates will likely heat up, and the fate of the child tax credit will be a major discussion point in Congress. So what's the takeaway here? The child tax credit isn't going anywhere, but some changes are happening. For most families, the increase due to inflation will be modest, around $100 per child. But for lower-income families, the ability to use prior income years to qualify could be a game changer. However, the big question is what happens in 2026. If Congress lets the expanded credit expire, millions of families could see a major tax hike overnight. That's why it's critical to stay informed, especially as lawmakers debate whether to extend or adjust the credit further. As always, planning ahead is the best strategy. If you want to make the most of your tax benefits, consider speaking with a tax professional and keeping up with updates from trusted financial sources. I'm Mark from Insightful Retirement, and I'll be back soon with more updates to help you navigate your financial future with confidence. Stay informed, and I'll see you in the next one.